Hello and welcome to the Weekly Market View. Once again, I'm joined by Bill Hubard, Chief Economist at Markets.com. Good to see you, Bill.
Angus, it's good to be here.
And we've got markets rallying like crazy. I mean, this is pretty unbelievable because, throughout the morning session, the FTSE was just a little bit higher, and in the afternoon, the US markets have opened. It's been like a bit of a free flow of buyers. I mean, really spiking higher. FTSE's around 62.50 now. So obviously we had some good numbers out of the US with the initial jobless claims and the ISM data, which obviously has helped fuel those gains. There must be something bigger than that, though. What's your take on this rally?
Well, I think, Angus, and we talked about this as we went into the end of the last year, I think we've seen a massive amount of bond money globally come into the equity markets. And as I mentioned early on, and I look probably smarter now than I did even a couple of weeks ago, I mean, I was looking for maybe 6,800 in the FTSE by the end of the year. I think one of the things, and it's even interesting because, some of the, especially the earnings out of the States, Apple, etc., not as good as expected. But one of the things is, I think, if you look to the statisticians, I think 71% of the companies reported so far, the earnings have been at or better than expected. And I guess the feeling being is, if the earnings were that good last year, which wasn't a great year, I think one of the things that we've gone into this year, in looking at the States, we didn't fall off the fiscal cliff. I haven't seen, because I was away last evening, but they were supposed to vote in the US Congress on the extension of the debt ceiling to at least the 19th of May. If that's been done, again, that's another political situation that's gotten away from the market. So now we can get back to the central banks / economic numbers moving the financial markets.
Yeah, so everything's supporting really the bulls at the moment. Let's focus more on the UK because we had again unemployment numbers, and once again employment hitting an all-time high. Yet, most importantly, tomorrow morning is GDP figures for the UK. We're expected to contract. Why on earth are there more jobs being created, but we're not growing?
Well, I think one of the things, and I think we touched on this again, the middle half of last year, when unemployment, although it wasn't getting better, it wasn't getting any worse. And one of the things I think we talked about was how many, quote, cottage industries, Joe Bloggs and Fred Smith, that have been laid off from a major company, were now opening, as I say, cottage industries, a small industry, 2, 3, 4 people using their expertise. And I think, and even if you looked at the numbers yesterday, if you looked on page 38, paragraph 19, it was saying, yes, we had a sizable increase in employment, but nowhere close to an employment number in reference to wages. So you may be working, but most people possibly taking jobs hoping, that if I have a permanent job now, when business gets better in May, June, or July, instead of making me an intern or a temp, they'll make me a permanent. So that's one of the things that we are seeing. We are seeing lower unemployment, higher employment, but not at, quote, a livable wage.
Okay. And so what's your call then for GDP tomorrow? And if it's, in the negative figure, it is. What do you see for the rest of the year? Because that looks dangerously and perilously like we could potentially see another year of complete flatline.
I think so. I'm in the minus 0.1 to minus 0.3. I think we had that wonderful 0.9, was a magnificent quarter. But I've said all along that even if we got close to like no growth in Q4, it still shows at least the second half of last year and probably the first half of this year, nothing but flatlining. And I think one of the things, even Sir Mervyn said that, maybe you're getting a few parting shots before we start selling the big issue on the 30th of June, is the simple fact is the government's austerity budget is not helping growth at all. He keeps talking about inflation. Again, I don't see inflation. I mean, last week we got good numbers out of the States. They were deflationary numbers, okay? And of course, Japan, the concept of trying to set an inflation target of 2%. They haven't even had an inflation target of 1% over the last 10 years. But I think the simple fact is I am looking at the trade numbers from last week. And the public sector borrowing, very, very negative, okay? And if we couple that with even the best case scenario of no growth in Q4, all right, I still think I don't care whether we want to call it triple dip, double dip, we're still in a recessionary or contractionary. Okay, and I think we've seen that today. I think the last time I looked, sterling was down another 0.75, 75 pips against the dollar here. So we have a strong euro and a weak sterling, and I think this is going to continue through here. But yet, conversely, this is something that the Bank of England has got to be appreciative of. Okay, a strong currency is not going to help us, especially if we're having a mammoth here exporting automobiles, and as the euro continues to struggle at the 134 level, and we got talk from Draghi earlier this week saying basically we're not going to change that scenario. So I think most people, even I may have to agree that we're not going to get a rate cut. So, but what does that do? 134, 135, 136 in with the euro. What is that going to do in reference to export growth in Germany and France? So, I mean, it's a situation where here in the UK, I don't care what you want to call it, triple dip, a double dip. Yeah.
What do you think then for the whole year in total growth for 2013? Obviously, most people are expecting 1%
yes.
for 2013. What's your expectation?
I mean, as you saw yesterday with the IMF, World Bank, basically saying that they had just reduced growth in the UK from 1.1 to 1%. Again, that will be a good number, and I think that will be a number that people feel that is a realistic number and what they'll be looking at. But I also here in the UK, I am expecting another round of QE.
Yeah.
3, 4, 5, another 50 billion, okay? Probably, whether it's, February or March. February, of course, we get the inflation numbers. But one of the things that I think with our people have to look at, come June, remember, this massive 0.7% increase in tuition fees on an annualized basis in the June-July numbers falls out of the calculation, okay? So I don't see inflation being a problem. And I mean, on the high street, it's always post-Christmas sales now. Then we're going to be pre-Easter sales. So I see no problem with inflation. I see the Bank of England. I still can't believe that the European Central Bank is not going to drop rates another 25 basis points sometime in the next 3 months.
Probably cut sometimes.
I think it has to, because I don't see any growth at all. Maybe we're getting away from, quote, recession, but I don't see any growth in the Eurozone.
Okay, well, let's hope that's not the case. Thanks very much, Bill. Good to see you.